Hi and welcome to our weekly report for the week starting Monday the 24th of February. We have a quieter week ahead of us, which starts with China industrial production and retail sales data on Monday. On Tuesday, we should be on the lookout for German GDP Q4 figures and US housing and consumer confidence data. Going forward, US home sales, in addition to the weekly crude oil inventories, will be closely watched on Wednesday. On Thursday, the main point of interest is reserved for US preliminary Q4 GDP figures. Also, jobless claims and durable goods orders data will be released in the afternoon. The week will finish on Friday with German unemployment rate, US PCE and Canada GDP figures for Q4. Now, let's take a look at few markets. This is the intraday 4-hourly price chart for euro-dollar currency pair, which is quite nicely downtrending as indicated by this falling resistance trend line. Key trading level going forward at the moment is at 108.75, which would basically the cap, this oversold bounce back. Bears would quite likely test that level as a major resistance from the intraday point of view, potentially looking for more downside or extension to the downside towards 108, 107.90, possibly even 107.40 on the way to 107, which is nice and round number. Alternatively, if we see a consolidation here and a breakout above 108.75, the next level of interest to the upside as a resistance is at 109.25. Breakout above that level could potentially target this falling resistance trend line around 1.10, which will be indicated by the cluster of these previous lows. Only the end of day close above 110 and retest of that now clearly defined resistance from above as a newly found support could negate bearish outlook, potentially opening the way for an extension to the upside targeting 111, 111.40. Cable, sterling dollar as well, intraday we are seeing this sideways consolidation price action, although the current price is creating the sequence of lower highs and also lower lows, and this previously important rising support trend line has been tested on a number of occasions now as a newly found resistance. Key trading level going forward is at 1.30, nice and round number. Bears appear to be in control below that level, potentially looking for an extension to the downside and retest of additional downside support towards 129.25, 128.70, possibly even 128. Alternatively, if we see an oversold bounce back and a spike higher and a breakout above 1.30, then the next logical resistance on the upside is up here at 131, 131.23, as indicated by this, as I said, previous support trend line, which is now going to be referenced as resistance, and also R1 in pivots. Only the end of day breakout and retest of that 131.20 as a newly found support could negate the bearish outlook, potentially opening up the way for an extension to the upside targeting 132, possibly even 133 as indicated by this high from 31st of December. Dollar Japanese yen appears to be quite nice and bullish. We saw a very strong breakout higher. Key trading level going forward is at 111. Pullbacks into that level and bullish reaction higher would open the way for the retest of 112, 112.50, 113. Breakout above 113 could possibly point to a longer term resistance towards 114 level. Alternatively, if we see a corrective pullback and the loss, the end of day close of 110.90, 111, a retest of that level from underneath as a newly found resistance could change the outlook, potentially targeting additional downside supports initially at 110.40, 110, 108.85, which would quite nicely correlate to the fibs from these two swing lows to the swing high as well, in addition to it being a pivots and moving averages as well. Gold appears to be quite nice and bullish. Currently, it appears to be overextended on the upside. If we see a corrective pullback slower, the initial downside support is at 1623. Confirmed loss of that level could open the way for a deeper retracement and retest of 1614, 1611, possibly even 1600 for the retest of this rising support trend line, and a spike higher. Therefore, corrective pullback, buyers return around this level, respected support. If we see some significant buying pressure, we could potentially see a spike higher. Alternatively, if we see a shallow pullback and a rally, or just a gradual move higher from these current highs, they could potentially open the way for the retest of additional resistances towards 1660, 1675, possibly even 1700 to the upside. Alternatively, if we do see a corrective pullback and end of day close below 1600 and retest of that level from underneath as a newly found resistance, that would negate the current bullish breakout scenario, potentially opening the way for a deeper corrective pullback to the downside towards 1576, 1570, possibly even 1553 supports to the downside. Lastly, let's take a look at crude oil. Crude oil appears to be bearish at the moment. We are seeing an oversold bounce back, which potentially could look like a double bottom and a retest higher. This current price action appears to be a rising wedge formation. They tend to be bearish in their nature. They tend to break to the downside if they're seen in a clearly defined downtrend. So the key trading level for most of the traders who are trading crude oil at the moment is at 54.50 high. Key support to the downside is towards 53. So if we see a dip lower, a loss of 53, retest of that level from underneath as a newly found resistance, that could open the way for an extension to the downside towards 51.50 support, 50.50, possibly even 48.50 to the downside. Alternatively, if we see a spike higher and end of day close above 54.50 and retest of that level from above, that would negate the bearish scenario, potentially opening the way for a spike higher towards 57.50, which is quite significant because it's not just referencing this previous lows and also a pivot, but it's also a fib retracement of 50% from the current swing high at 65.40 all the way down to 49.50. Above that level, we would have 61.8 fib retracement at 59.31, which would also be a point of interest as a resistance to the upside. Thank you for watching. Thank you for listening. Stay safe and happy trading. Bye for now.